Welcome to TheoTrade. This is Don Kaufman. It's April 15th, 2019, and you are watching the TheoTrade evening video. S&Ps with 10 minutes to go to the close. Well, they're down a whopping 4 points. Listen, we're just off once again to 29.11. You know, when it's not so much the S&Ps on my mind, it's not even bonds or even financials. It's earnings. Speaking of earnings, several of the financials have come out with earnings, but, you know, financials, they just don't do it for us around earnings and earnings-related trades, because often what you get, you know, JP Morgan beat, Wells Fargo slipped and missed. Effectively, we have Bank of America coming out tomorrow. We had Citigroup earlier today, Goldman Sachs earlier today. But now we're actually front and center. We're looking at Netflix, and Netflix is going to come out. It's Tuesday, April 16th after the bell. And I often use Netflix, if you will, as kind of the marquee. And really, that's the beginning of the big technology earnings kind of cycle. And again, that earnings cycle often kind of kicks off with Netflix, which is exactly what we're going to discuss tonight. You know, when I start to look at earnings and earnings-related trades, it's not here in the charts, okay, that I happen to spend a lot of time. Now, of course, everybody would probably mention, well, that's because, Don, you're an anti-chartite. It's not about the chart. You have to understand that earnings trades, for me, they're going to revolve around the options and options marketplace. Even if you're going to trade the stock, it's still about what is the options marketplace telling us about risk. I mean, really, like, can you actually see that by looking at an options chain? And absolutely. I mean, listen, we're looking at about a 91, 92% implied volatility with about a 20, let's call it $6 expected move. What does that effectively mean? It means the remainder of this week, Netflix is really supposed to move about $26. It's $26 higher, $26 lower. That's great. Earnings are coming out tomorrow after the bell. It's supposed to move $26. But how does that help us? Because we're not sure, per se, what did Netflix move the previous earnings and the earnings before that and the earnings before that. Now we will actually deviate over to a chart. And the reason I'm going to deviate over to the chart is a quick glance, if you will. Obviously, this is the coming earnings effectively tomorrow. Here's the previous earnings period. But, you know, in the previous earnings period, the market was in the midst of some fairly wild volatility. But just to get a feel, look how much higher implied volatility was during the previous Netflix earning. I mean, you're looking at almost a 60% implied volatility. Okay. Again, all I did is just brought up like a 5-year chart. And I zoomed in a little bit, and I have implied volatility as one of the studies. By the way, implied volatility, when you're actually looking at an implied volatility study specific to thinkorswim, that's a 30-day, or what we term VIX-style implied volatility. It says about what, you know, back at that time frame, about a 60% implied volatility. The earnings period even before that, there it is. Look at that. The implied volatility literally was about 60%. And you can go back and again and again and again. So immediately, just by a quick glance, at a chart, huh? Think about that. The anti-chartites looking at charts. But just at a quick glance, we're able to kind of zero in on where implied volatility was in the previous 2 earnings announcements. And you can see it was substantially higher than it is right now. Okay? Is that, if you will, a bit of a tell? You know, you can go back even further. As I said, I'm bringing on like a 5-year chart. And I want you to see, though, well, you know what? Okay, based on, again, when you look at some more substantial data, just actually drawing and kind of bisecting right there is where implied volatility currently is. That's not, okay, that unusual for Netflix, again, to be then at this particular volatility level. It appears in the previous 2 earnings periods that we were just in the midst of, well, some heavier volatility in the overall marketplace. Again, why am I spending time on looking at something like implied volatility? Because it effectively prices the options. What I'm trying to get a handle right now for, am I going to buy, okay? Am I going to buy premium in Netflix? Or am I more apt to want to sell premium in Netflix? You know, one of the things that does kind of make me a little bit nervous about Netflix as a whole, this thing, it hasn't really moved a whole lot. Okay, you can look at this one of two ways. When I say it hasn't moved a whole lot, well, I mean, really, the beginning of the year to break away, to the upside. From that point forward, we've pretty much been stuck between a rock and a hard place. Let's call it 340, and the upper end of this is about 380, about a 40-point range. And yet, all into earnings, wrapped into the earnings announcement, we're supposed to have this $26 move. Now, I said, you can look at it one of two ways. Either you think we're going to continue to be range bound, okay? I'm actually going to take the second half of that, and I'm going to look for us to actually break range inside of Netflix. Okay, things to get a little nutty inside of Netflix, if you will. And I look at the implied volatility in Netflix, and I think to myself, this is an underlying with a whole lot of pent-up aggression. And given the fact that we just saw news the other day, news on Disney, of all things, to come out with streaming service, and the streaming service, Disney news really whacked Netflix hard. Could you imagine if Netflix missed in terms of subscribers over here, what they're going to do to this stock? Okay. Meanwhile, on the flip side of that, again, I'm taking both a bullish and bearish stance in here. On the flip side of that, here's a company that time and again has just been spectacular in hitting their numbers. They hit their numbers, this thing flies. Okay, flies above what? Well, if it flies above 380, you're golden. Golden if you're going to be buying premium. Now, when it comes down to it, earnings, it's not that hard. Like people make earnings and earnings-related trades, I believe, much harder than it needs to be. This is something I'll elaborate upon, okay, in the future days and the days to come when more earnings come out. But the reality is, okay, there's really, all right, one of four things that you can do, okay, revolving around earnings. People talk about they can get bullish, you can be the bear you want to be, okay, or you can go what we call kind of, neutral long, or neutral, again, that's an N. I can't draw in here. Neutral short, neutral long, neutral short. What that effectively means from a risk graph, all right? Neutral short, there's a risk graph of it. That would be selling options premium. Selling options premium and just praying we stay inside of a range, right? Then there's also neutral long, okay? Where you ultimately want us to do what? To break outside of that range. In this particular case, by the way, when it comes down to earnings, that's it. People get all kinds of, well, I'm selling volatility and I'm doing this. Okay, so you're selling volatility, okay? So you're neutral short. You're neutral short if you're selling volatility in any way, shape, or form. Well, I'm buying volatility. Oh, okay, so you're neutral long. Well, I'm getting a little, bullish, bearish? That's it. There's one of four things. Don't get cute around earnings. Let me actually show you precisely what I mean. Here we have about a $26 expected move. Stock's trading about what? 350. Let's open up a ton of strikes. All strikes. Let's get strike happy. Well, we can go about $25 out of the money. Well, I don't know. Just take 350 and add $25. Comes out to like 375. Now, okay, it's a little bit weird. Maybe we buy that option. Okay, turn around, buy the option, 375s, maybe sell the 377 halves. Well, what is this? Buying a call spread for a 53-cent debit. Then I would turn around, do the exact same thing. Well, it's 350 minus 25. What does it come out to? Right? Somewhere right around here, I'd be buying those, okay? Selling these. Look, let me analyze this trade for just a second, take it into a risk profile, and let's not get too crazy in here, but this is, again, a rather straightforward, and I'm going to come in here, expiration +1. It's rather straightforward, again, neutral long strategy. And as I kind of zoom in over here, I just want to highlight this. This is where the stock happens to be, right? What do I want the thing to do? Explode higher or explode lower? It's net neutral. It's looking, okay, not just about an expansion of volatility. All I'm simply saying is $26 expected move inside of Netflix might not necessarily be enough, okay? This is effectively buying an iron condor. There's the closing bell. This is effectively buying an iron condor. Why would I want to do that? Because again, I feel we might move outside that $26. Again, there's going to be a lot more to come in earnings in the days to come. This is a strategy that, when would I place it? Probably later in the day tomorrow. Okay, I kind of want to zero in and redo the strikes and zero in. Like, is the stock going to be right at 350 before the earnings? Or maybe the stock actually sells off to 345 and I might want to recenter these. This is something I'm going to be talking about specifically tomorrow in the TheoTrade chat room with a lot more earnings trades to come. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.